Buying with confidence, what the numbers really mean. Well, welcome to my podcast, Seeking Wisdom Through Real Estate, where we dig deeper into truly understanding and gaining knowledge from experienced and educated people. I'm your host, Leah Massey. I'm a real estate agent who is trying to educate myself more and bring you along for the ride. Every week, we will be bringing you information to help you unlock the understanding in real estate. So join us today with my guest, Matt Socol. Hello, Matt.
Hey, Leah. Thanks for having me.
Thanks for being here. Matt has 13 years of experience as a loan officer with West Penn Financial Services Center in Pittsburgh, PA. So we appreciate you joining us here today, Matt.
Yeah, I'm excited. This is great.
So before we jump in, can you tell our viewers about who you help and what your role is in the home buying process?
Yeah, absolutely. Great question.
Mhm.
So I'm Matt. Thanks for the great introduction.
Mhm.
I'm a mortgage loan officer, and what we do is a lot of times we get people started in the mortgage process.
Mhm.
I mean, step one is almost always reach out to the real estate professional,
Mhm.
and once they determine if they're not buying in cash, the next option logically would be to obtain a mortgage, and that's where we step in to say what path to obtain the mortgage is possible.
Mhm.
We look at payments, we look at options, and we call that in a nutshell a pre-approval.
Okay.
Finding out what your buying power is before you even find the house.
Okay. So you're saying that does it matter the order you mentioned? Should they go to the agent first or come to the lenders? Because sometimes I see it either way.
Yeah, it does definitely happens either way. It really depends on the buyer's personality type and where's that handoff. Is it a past customer referring them directly to us?
Mhm.
Are they going to the real estate agent first? Um, at our in our seat, it doesn't matter.
Mhm.
We just want the conversation to start to begin the process. But we also know a lot of people go and look at Zillow or they're looking at open houses, and that's where they a lot of times will connect with that agent first.
Mhm.
So we kind of understand that and be prepared for really just any form of contact and then take it from there. One of the first questions we ask: are you working with a real estate agent?
Mhm.
How did you get our contact?
Yeah.
How can we help? That
Mhm.
way we know more as a team, we're all working together to the same goal.
Okay. And to just to let the viewers know, if they did happen to come with you, stop at you first, there is a limit to how long that pre-approval is, right? Isn't there a time frame on that pre-approval?
Yeah, I mean, for any pre-approval, they're
Mhm.
good for 120 days.
Okay.
That goes from the time we run a credit report. That's the expiration portion of it.
Mhm.
But I don't stress the expiration in the sense that a lot of people will ask the common question is, when should I start this?
Mhm.
And like from a professional standpoint, my answer typically is it's never too early.
Mhm.
Because yes, it may be good for 120 days, but once you get it done once, you have us in your corner.
Mhm.
So a year could go by, and I could have you pre-approved, Leah, and you could
Mhm.
call me next February and say, "Hey, Matt, I just found a house.
Mhm.
I know we haven't talked for a while, but I wanted to see where we stood, or can we update that?" It takes a third of the time to get that update done as it does the first initial pre-approval. So easy to do. And again, we're in the corner, so we can do that, almost in an instant,
Okay.
which is super helpful.
Well, that's good to know too to get it done earlier because sometimes they may want to put in an offer and there's a lot of bids and they're kind of pressed for time. So it's good
Right.
to already have that done. All right. So, so before numbers even come into play, what information do you need to help someone decide if buying now makes sense for them?
Ooh, that's a good question.
Mm.
That's a lot of times what I'll do in an intro kind of
Mhm.
call just to try to get from the customer, how did you get here?
Mhm.
What's the motivation? What are your goals? Do you have a time frame? Is it I want to buy in 30 days? Is it I want to buy in 3 years? I mean, there's all kinds of different,
Yeah.
reasons people reach out. Is it a lease coming up? Is it expanding family? What's the reason? Job, whatever it may be. That helps me figure out really with kind of asking those what are your goal questions,
Mhm.
find out how I can advise the most properly, however you would say
Mhm. Mhm.
it. Because depending on that, and then I can get in a little bit of your employment, a little bit of your income without even having to run everything.
Right.
Be like, okay, wait, this is something that maybe we do kind of plot along and take our time on
Mhm.
just to make sure there's, all stones are uncovered, or is it something where, oh wait, I just found the house last night
Mhm.
and I'm going to try to buy it today.
Okay.
And there's
Yeah.
different levels kind of to the uh, you know kind of the priority we would have to put on that.
Okay. Now, how about what usually matters more than the market headlines?
Okay. Everything. Right. I a lot of times when I'm talking to real estate
Uh-huh.
agents or I'm talking to buyers, I mean, the news is the news. A lot of times it's out there, in my opinion, to scare us,
Mm,
right?
yeah.
So I try to stay out of it as much as possible. The only
Mhm.
reason I'm really in it is just to kind of take some of those preconceived notions buyers have
Mhm.
out of the kind of the on a playing field,
Right.
um, and just going with, again, what's happening in our market in real time for your situation. Um, Even when you look at like kind of nationals or even local news, I mean, again, it's great to do your research,
Right.
but through what lens, through what filter, and that's why I tell people, a lot of times I want to kind of clear slate and then let's build it up again for your specific scenario. Because even if your uncle bought or your cousin bought or your coworker, their situation, and I don't use the absolutes all the time,
Right.
but their situation you can almost guarantee is not the exact same as yours.
Right.
So good to get the information, talk to the professional, and let us come up with a plan with you
Right.
specifically for you.
And especially like you said, they may coming to you because they may have seen what was on the headlines out there and got scared and think, "Oh, I can't purchase." But maybe once they come to you, they say, "Hey, wait, I really can."
Exactly.
Actually, that happened with me. I thought I couldn't, and
There
then
you
yeah, then I seen the lender and I was like, "Hey, I can."
Exactly. That's like,
Yes.
again, there's no harm in reaching out. And yeah, you're going to see, the most stuff that hits the news is the interest rates, and they're up, they're down, they're this, they're
Yeah.
that. And I kind of joke with a lot of the agents you've seen me, is as soon as one happens and it hits the news, the other is already happening. So it's like
Mhm.
if the news is telling you, oh, they're up, blah, 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 that means almost inherently they're already coming back down, and then vice versa. So I don't let that be my driving force. If I was a buyer, if I'm advising a buyer, I'm like, you almost get the information and then we'll apply it when you're getting closer to actually purchasing the house.
Right.
We do updated estimates, get all the information. In fact, there's no surprises. That's the beauty of, you know, talking to a lender.
Yeah. And if they aren't ready to purchase, they can't, then I'm sure there's advice given to them as far as what to do to maybe get prepared to buy in the future.
Yeah, I mean,
Yeah.
a preparation
Yeah.
situation happens all the time.
Yeah.
Sometimes it's just in the intro call. People
Mhm.
have questions like, "Hey, I want to again try to buy this year. What can I do?"
Yeah.
There's a couple things we could always just point out and just you know advise,
Mhm.
point in the right direction. And then there's others where, yeah, we just can't put it together right now for whatever reason.
Mhm.
And yeah, that's absolutely something that we can go the next step and say, okay, because of this reason, we can't do it this moment. But if we take care of X, Y, or Z, next thing you know, 4, 5, 6 months go by, and we can very well be in a spot for home purchasing.
Okay. How do you separate someone's personal readiness from what's happening in the housing market?
Um, Pretty easily, because again, I know enough about the market to be just dangerous. I always say,
Mhm.
like, I leave that to you guys, the
Mhm.
real estate experts, and I always defer any of those kind of questions on what's the market doing to you guys, because you I always say like the gas and the brake
Mhm.
of the market. You guys know that better than anybody.
Mhm.
Me, I want to kind of come with a blank slate. Yes, I see customers every day, and I know kind of what is getting accepted, what's not.
Yeah.
I have a general idea, but I want to again kind of go blank slate and just focus on the customer and their needs, and then kind of react to the market.
Mhm.
And if we need to pivot because of something, then sure. But I like leaving it open ended and having a couple options in case we do need to pivot.
Mhm.
That's how I kind of keep it clear and concise, to not have to even have really the market kind of affect me when I'm doing,
Mhm.
kind of a consultation.
And due to the fact that you guys work with different investors, right?
hmm
You can kind of pivot. You have other people that you can go to. So they can you explain like how that would help?
Yeah, I mean, there's two things that we can do. One is, like you said, yeah, there's multiple investors, so we
Mhm.
don't have one set specific interest rate.
Mhm.
So we can have, again, multiple options in there to kind of help find what could be the best in the market.
Mhm.
And then, more commonly I even see though is just different loan types.
Yeah.
There's a lot of different loans that are out there.
Mhm.
There's a lot of great stuff. There's a lot of information too.
Mhm.
So we kind of help filter that.
Mhm.
And for me to send a pre-approval with multiple loan options is becoming more and more popular.
Mhm.
I do that on purpose because, again, of the flexibility. It may be a certain reason why one loan is better at one, parameter or one house, and then another loan may be a better situation in it for another house. Or if maybe that buyer, saves up a little more and a few months go by, or maybe they don't, whatever it may be, I just like options.
Right.
And then I can show the customer, and then kind of they decide, or we can kind of help decide which makes the most sense. We don't have to necessarily do that all over the phone or in an in-person meeting. It's like, let me send you, let's do another follow-up where you're looking at them side by side. I'm a visual learner. So
Mhm.
I like to see it. So I like to send it to customers to be like proof of concept. Now let's make sure this makes sense to you.
Yeah. And Matt's right about that. And Matt, I had brought your older one with your older picture because the other one I wanted. This one was actually a booklet. The one
Oh
that you
yeah.
sent me, I didn't want to have paper, but he does have an updated one. But yeah, he also lays it out here, so he definitely is a visual person. Likes to lay out the information because he gives us a mortgage map, which is great for us agents to use as well. So yeah, you were right on that. Um, what's a sign someone is forcing the timing?
Ooh, that's a good one. So in the sense of, um, really anytime you get emotions involved,
Hmm.
um, or we rush, I tell people that's where, I don't know, I'm going to generalize into humans. I think that's when we make mistakes.
Yeah.
Definitely me personally. If I'm rushing around and I'm doing three things at home at one time, then inherently I'm going to forget something.
Right.
Um, and when you're buying a home, an investment so large, the number's so big,
Hmm.
not something you necessarily, again, in my opinion, would want to rush or make a mistake with.
Right.
So sometimes we end up trying to, like, not trying to, but end up slowing people down
Hmm.
in a way, just by, again, be like, hey, we need to provide you with certain information. That way you're making an educated decision. I understand sometimes houses, their neighbor's house comes on the market, or it's like next to their parents, and we want to do it relatively quickly. But again, the nice part is we have a system
Hmm.
where my prompts get me through every question, regardless whether I'm doing it in 20 minutes or I'm doing it in 20 days.
Oh, okay.
So it's customer specific, but that's something I'll work with them and the agent. Again, what's the motivation? Why are we going so fast on a Friday night, for this specific house?
Right.
Again, get the whole story. It makes sense. Everything checks out. Sure, let's get you the information. That way you can make the best decision for you.
Right.
Um, but usually the one key indicator is when the buyer starts telling me what to do
Hmm.
right up front. I'm like, ooh, you're probably going a little too quick.
Yeah. Yeah. And I guess, what do you see the reasons for some people why they might want to rush? What have you seen? And then they
Uh,
found out later on by rushing this has happened. Like
uh,
what's some of the things?
yeah, I mean, it's again, I go back to like just overall general human things.
Hmm.
Like I feel like we're all procrastinators
Right.
to just different degrees.
Hmm.
Um, Me being slightly on the procrastinating side, I'll hit a
Hmm.
deadline, but I
Hmm.
kind of need a deadline.
Yeah.
Most people are like that, though.
Uh-huh.
And when you're buying a home, you don't. Some people plan it out for
Yeah.
years,
Hmm.
and a lot of people don't.
Hmm.
And when they see that one that checks, a box A, B, or C, after they've been casually, combing the internet, then boom, they want to just, this is the one. We're diving into it. We've been looking casually.
Yeah.
Sometimes, again, that works, and sometimes they don't even know where to start.
Right.
And that's the kind of the fear of it is, wait, you need a lot of information. These are bigger numbers. You want to take your time.
Yeah. Yep. And what financial or lifestyle changes can quickly shift someone from not ready to ready?
Okay. A lot of it's going to be probably credit based.
Hmm.
I mean, that's the biggest kind of gray area I see with people not understanding necessarily.
Hmm.
And that's not a lot of times the fault of the consumers, the public. It's the fault of the system
Right.
is gray. It's how it's kind of designed, and they always update the models, and it can be something that's very unknown. That's something that we can, again, educate on to some degree, because we see credit reports all the time.
Hmm.
But one of the key indicators is, credit cards, and that's one of the things I see hold a lot of people back.
Hmm.
Either two things that don't work well in the credit kind of overall algorithms, and I'm going to generalize here a little bit, but if you have no credit cards, it can be tough to get that score higher and higher and higher. And then also, if you have too many,
Yeah, okay.
with too much utilization, you've got them maxed out, or you're using, over half of, the limits.
Mhm.
You start to see the score come down. In a perfect world, a lifestyle change to the question:
Yeah.
if you had a credit card or two, maybe three,
Mhm.
and you used it sparingly, and then you pay it off each month,
Mhm.
works out on two fronts. One, you're paying zero interest. Love that.
Right.
Saves the consumer money.
Mhm.
And two, you start to see the utilization is as, what's available is as high as possible. And usually that's where scores go up.
Okay.
So that's a tinker that a lot of people, if they did that, then they would be in, a better spot for a home purchase.
Okay. And I did see sometimes too, like I came up against something like maybe owing taxes, back taxes,
Yeah.
things like that. So what's some things that can show up that people might not think about? Like when they are doing it, like, okay, like that's something that happened. Like they didn't realize that, oh yeah, I am on like a payment plan with taxes. I owe some taxes. So what's other things that you've seen that people may have not been aware of that show up?
Yeah, I mean, there's a
Okay.
lot. Yeah. Um, but just things that are monthly obligations,
Mm-hmm.
that's what a lender's gonna want to concern themselves with.
Okay.
Because we're, you know, in theory, doing a loan
Mm-hmm.
with a monthly obligation for most of the time 30 years.
Mm-hmm.
So how you get approved at the end of the day, once you get through everything, is really comparing obligations to income.
Mm-hmm.
So anything that would again be reoccurring, like if you're on a tax payment plan or if you're on a collection payment plan,
Yeah.
utilities, things like that, rent, those are similar to housing, so like they're not always counted,
Mm-hmm.
because it's like if one you do one, the other one goes away. It'll just go to the new house. Um, that's something we go through, but anything in that reoccurring space, I mean, you may co-sign
Mm-hmm.
for a car. For I
Yeah.
see that all the time for maybe a dependent or for a parent or something like
Mm-hmm.
that or a friend. Um, Things that they put on to your credit report. I mean, it's going to show up, and you may not you know in fact make the payment, or you're splitting it with a roommate or this or that. So it's just be cautious of those kind of items. Anything that's going to show up on a credit or again on a reoccurring basis, we're going to look at.
Okay. All right. Which one takes the longest to fix? If somebody does have something that they need to work on, which usually takes the longest?
It depends what we're fixing.
Okay.
Because credit's the most popular,
Mhm.
just because again of the unknowns. It's something that we're all kind of managing.
Right.
No one knows their exact credit.
Mhm.
If you do, I'm usually like, you probably don't.
Mhm.
It's very
Yeah.
hard, and it's always moving.
You're right.
It's and people don't understand that it's liquid. Um, when we even get a score, whether it's an app or it's you're applying for a mortgage, that's just a snapshot. It just takes the picture right then and there. But then the next day happens, and it's going to be different.
Yeah.
Could be up a couple points, could be down, but there's a flow to it. So it's more of a credit range that
Mhm.
people have, and then we just have to again kind of look at it in that snapshot and just deal with it. Um, that's probably the most popular. Just
Mhm.
trying to get it, flow it up more and just over time and making payments and doing some of the things we talked about. But I mean, employment could be one.
Mhm.
If you switch career path,
Mhm.
that could be something that takes some time,
Okay.
because of just the, volatility of income. We have people starting businesses. We have people getting into different careers, which is great, but we have to prove basically the stability of
Mhm.
that source of income.
Oh.
And that can take some time too. And then the third one, I guess, would be, now I'm thinking about it, I mean, just that cash up front.
Mm.
Sometimes it's the savings. And sometimes that's where they talk to us and they realize, oh, these numbers are real.
Mhm.
And they're not, they
Yeah.
exist, and they're not the smallest thing
Yeah.
out there. So that's a very common, kind of misconception of, what do I need to save to? And again, that depends.
Mm.
It's very, very specific. There's so many options out there, so many good stuff, that you want to make sure for you what that number is going to look like in your price range, in your area, property taxes, all those different items. And then we start talking about, okay, how are we paying for it? Okay, what do we have available? Okay, we don't have that. Now let's look at alternative options. Or do we need to save? So
Do you
really
have
depends.
do you have a opinion on how much, at least how much people should have be saved, have in their savings, or have available for them before they start to purchase?
No,
No?
because there's so much that's
Okay.
out there. And a lot of times when I talk to people, and again, I just go through
Mhm.
your goals.
Yeah.
So then I kind of can work backwards to say, okay, that's a purchase price of around 200,000.
Mhm.
Now let's see what you don't know, like what payment would be. Like this is what it would look like. This is how much your total cash would be. Okay, and then again, it kind of prompts the, oh, I need to save, or I have that, or I can get a gift from. Like there's different options.
Mhm.
Um, so I don't like to I don't want to discourage
Right.
anybody because again, there's different ways
Mm.
to pay for those items. Let's talk through it, and then
Okay.
if we need to put a plan to save, let's see how can we do that. Is it possible? How long will it take? That's stuff I can specifically talk about.
And plus, there programs out there to get help with down payments and closing
Correct.
costs too.
Correct. Yeah. I
So
mean, there's
yeah,
ways you can, in theory, I mean, come
yeah,
with very little. I mean,
yeah.
it's just, again, not assuming. That's probably the best advice. I mean, I have
Right.
for anybody is
Hmm.
just don't assume anything. It sounds simple. It is simple, but it's true.
Yeah.
So that's where I'm like, yeah, just call and let's walk through it. Because there are so many different ways that you can, pay for it. Is how I
Right.
said.
Well, I just want to go to this since we're talking about that real quick. I know that that West Penn does offer an app that helps us with the buyer's estimate,
Hmm.
estimate. And just can we just break down some of those real quick, just so people can know? I just random. I'm just saying, like,
Hit me.
okay, all right. So when we were talking about closing down payment and closing cost, that down payment, how's that usually figured out? So what should people be thinking of when they think of down payment?
Oh, good question. So, yeah, it depends.
Mm-hmm.
So if you look at like the traditional loans, and I don't want to bore you too much,
Mm-hmm.
but
That's
you look at the most
my
pop.
viewers will love it.
Okay, yeah, the most popular loans, like statistically, that buyers use are
Yeah.
conventional loans and FHA loan,
Mm-hmm.
which is a government version of a conventional loan. For the typical minimum for a conventional, for example, is 5%
Mm-hmm.
of your purchase price. FHA's is 3.5%. Conventional has a version that we use where you can do first-time home buyers and certain income limit qualifications can go as low as 3% down.
Mm-hmm.
That's something we use a lot. Um, that's a great start.
Okay.
So somewhere in that 3 to 5% for a down payment, you have options.
Okay.
You have good options, multiple options. That's what I like.
Mm-hmm.
There's a couple versions where we can go as low as zero,
Mm-hmm.
and I'm sure for veterans for VA loans,
Yeah.
and then for a USDA loan for rural areas.
Mm-hmm.
But that's defined by a map. It's going to be a little bit more restrictive. So I try to stay in that space. But at the end of the day, the more you put down, the less the payment's going to be.
Right.
And I tell people all the time when I'm pre-approving, that's the seesaw. That's the up and down. And there's not a perfect answer, but there's a best answer for you, the
Right.
individual, like which balances which way. Some
Okay.
people aren't as concerned. I could put a little bit less down, need more money in my pocket
Right.
for whatever reason it may be, but okay with that, increase in the payment. Well qualified for it. Doesn't make or break us.
Mm-hmm.
Whereas then other situations like, no, I need a certain payment. Well, then what do we do? Now we start to increase that down payment to get you a lower loan, to get you a lower payback.
Okay. Now, some people think too, like if they are paying more of a down payment, does that decrease their interest rate or change with that interest rate?
Um, Without getting into uber specifics, I would just say it's a factor, but not an absolute. I mean,
Okay.
you could very well have this exact same interest rate, kind of regardless of the down payment.
Okay. All right. Now let's talk about too on here. Another thing that they see on here is they see the monthly payment information. So can you break down? We have the principal and interest, homeowners insurance, and monthly property tax and PMI. Can you explain some of that?
Oh yeah,
Yeah.
this is me on the phone every day here. Yeah, and that's what I kind of tell people. It's one of the questions I ask. I'm like, do you understand the monthly mortgage payment?
Mm-hmm.
And most people say like somewhat.
Mm-hmm.
This is like probably the most truthful
Mm-hmm.
answer. I'm like, well, if you have 30 seconds, here's my elevator pitch on it.
Mm-hmm.
You're going to have, like you said, the first part, the principal and interest, so pays the loan down,
Mm-hmm.
just similar to your car loan, similar to your student loan, something, they have something.
Okay.
So that's principal and interest. That'll be the biggest part most of the time.
Mm-hmm.
Then you're going to have 1 month's worth of the annual property taxes.
Mm-hmm.
That's the number I tell people, especially in our marketplace. We talk about marketplace, Pittsburgh area, greater area, even outside of Allegheny County, the property taxes are going to be one of the most volatile things that you'll see. right?
Mhm.
Right?
Right.
I just tell people it could be anything under the sun,
Right.
and we just got to deal with it. But it's very, specific and can definitely change,
Mhm.
obviously, house to house, street to street,
Right.
area to area. So we always want to look at that. Usually the second biggest would be taxes.
Mm.
Then you have 1 month's worth of homeowners insurance, which
Mhm.
is, similar to car insurance.
Mhm.
Again, just trying to liken it to something that people probably have, protects the home.
Right.
And then the last part is that PMI or private mortgage insurance.
Mhm.
That's just, I generalize it to mortgage insurance.
Mhm.
Private mortgage insurance just for a conventional loan.
Mhm.
But any loan that you're doing less than 20% down, you're going to have some version of mortgage insurance. This is what protects, well, allows you to put that less than 20% down, and then has a protection clause for whoever's giving out the loan,
Right.
because of the lower down. Now, another neat feature of a VA loan is there's no mortgage insurance,
Mm.
which is like a great feature.
Yeah.
Um, but that's why it's there, and that's what it does.
So those are factors too. If somebody doesn't wants a lower monthly payment, they might want to look at those taxes where they're moving to, and then maybe what they're putting down to not have that PMI and all that kind of stuff. Yeah.
Certainly.
So
That's
those
very common
are okay.
questions. And that's something a lot of times we debate. If we do have the money,
Mhm.
do we do the 20% down to try to eliminate that mortgage
Mhm.
insurance? Or again, is it more valuable to be, wait, maybe I do a 15% down or a 10% down, because when we go buy, hey, everything's in good working order, but I want to redo that kitchen.
Mhm.
It's dated. I want to get in there. Maybe I want to put that money into the house a different way.
Right.
And again, that's a good conversation to have. And sometimes, even if I know the loan, maybe we do a couple different down payment options, again, to show you, so that they can see in black and white the
Mhm.
difference between that payment and how much money you're bringing.
Right.
And then again, the individual will make the decision on what makes the most sense for them.
Okay. Now, how about the prepaid cost? We have the 14 months of insurance, 12 months of taxes, 30 days of interest. How's that?
Yeah, that's what you would want to prepare for.
Okay.
That's what I tell people. Those are going to be semi-fluid.
Mhm.
They're not set in stone.
Mhm.
Those costs. It's going to be specific to like when you buy in the tax cycle. The tax collector and the settlement company help out with that. But in PA, you have to pay both taxes and insurance ahead.
Mhm.
So even if you're not paying 12 months of your property taxes at the closing, you may be paying 6 and reimbursing the seller for 6.
Mhm.
So those are just kind of using a realistic lens, I tell people, is how I try to quote, to prepare you for what could happen. And then guess what? If it ends up being a couple less months,
Mhm. That's a good thing.
your
Yeah.
numbers are down a
Yeah.
little bit, which is such a better conversation, that I have with customers, than trying to have that go increase. I don't want to see that happen.
Right. And then we have the fixed cost. Can you talk a little bit about those?
Yeah, and then you're gonna have, I mean, that's when you get into closing costs.
Mhm.
That's where we'll go through that with people, and I say, the Commonwealth of Pennsylvania,
Mhm.
has a lot of costs that are required. It's like the kind of the blessing and the curse,
Mhm.
because there is a lot of them, and the numbers, you know, it adds up.
Right.
But it's also for who you're hiring too. So like if you have us as a lender, or whoever the lender may be is going to charge some cost to do the loan.
Right.
You're going to have third parties involved, when you're looking at, or getting a home inspection, or you getting an appraisal to verify the value. Things like that just need to be done for the most part through a transaction. Again, there's some give and take with those, but they exist. You want to
Right.
prepare for them as they exist. And then you have just the settlement services,
Mhm.
which is, clearing your title, getting through that process, um, a requirement that's going to be done, and there's, cost associated with that. People ask all the time, like, what's a good estimate for a number? I don't do it.
Mhm.
I don't do it. I just do the numbers.
Right.
We'll just
Right.
get them very accurate for you. It does not take that long, once I know the customer. Um, I don't really use a generalization. I think, again, that gets into that assumption thing I said. You start assuming things, and then
Mhm.
you're either going to be either kind of overconfident and shoot it a little too low, or maybe you're conservative and you shoot it a little too high. Like whatever it may be,
Right.
why guess?
Right.
Let's just get you the info.
Okay. All right. And then they get what to bring to closing, an estimate on that. So, and again, through that process, that can either go a little bit down or change or up maybe, or
Yeah, I mean, if
yeah.
there's always that negotiation phase. I mean, when
Right.
you're putting in the offer, once you get past that pre-approval and you find the house and they're talking to, you, a real estate professional, um, Yeah, there's different levers that can get pulled up and down. But again, if you know the base, that's all I tell people. Pre-approval up front is just a foundation,
Right.
solid foundation. You want a
Mhm.
solid foundation to build on, and then you'll know. And then that whenever the conversation comes is, hey, maybe the seller is going to pay this, or we're going to pay this, and to whatever it may be, we're just tinkering, and it's
Right.
a little easier to kind of digest and again make an educated decision.
Okay. Thank you. Now, when you said when someone asks to get pre-qualified, what information are you actually looking for? We talked about that, some of that, but let's go through some of that loan application kind of things. Like you're getting like your personal information from people, current employment or self-employment. Is there something if they are self-employed? Is that a little like what's certain things needed for that, or how's that look if they're just mainly self-employed versus having a W-2?
It's a couple different questions there you
Okay.
got
Okay.
rolling. So,
All right.
can I do the pre-qualification versus pre-approval first?
Go ahead. Go
Okay,
ahead. Yeah.
because that's one I get all the time.
Okay.
Um,
Okay.
it's like, what's the difference? And I tell people a lot of times it's just language.
Mhm.
Different lenders call things different items. Just
Okay.
kind of depends who you're working with, in my opinion. I have like a pre-qualification is more like stated information.
Mhm.
So, hey, Leah, how much do you make a month? And you would just tell me.
Right.
Not necessarily is it verified, not do I look at it.
Mhm.
Pre-approval is that next level where we go in and we verify it ahead of time. We're looking at what we're going to get into, like W-2s. Is
The
it tax
the
returns?
applications are done at that point.
Yeah, I mean,
Okay.
we're getting into
Okay.
really like taking any of the guesswork out of it.
Okay.
And I think that adds a level of strength.
Mhm.
And it's usually what we end up recommending,
Mhm.
for, the home buying process. Again, it's my whole spiel is why guess? Um, and a lot of times it's no fault to the consumer, but they might not know. I mean, one of the most popular things is I'll ask people how much they make, and is it gross or net? Is it
Mhm.
before or after
Right.
taxes? And and it's gross is what we look at.
Right.
Why would you know that if you're
Mhm.
not a lender?
Right.
So I kind of help people through that,
Mhm.
and again, I'll just verify it in most cases with pay stubs, W-2s, or specifically for your question, for self-employed, in
Mhm.
most cases, we're going to end up getting just your business tax returns,
Mhm.
personal and business tax returns. There's so many different setups for business.
Mhm.
Is it an individual? Is it S corp? Like what is the specific nature of it,
Mhm.
and that'll determine what documentation we need. But in general, lenders are looking at 2 years of history. That's regardless of employment. Whatever you do, we're going back 2 years. So you would want to mentally, physically, emotionally prepare for a review of the last 2 years. That's how, in general, not just us, just lending in general, um, our job is to kind of get a person to qualify, but then make sure that they're qualified and try to predict the next 3 years.
Mhm.
We're not good predictors. So what do we end up doing is we look at the past to predict the future. We look at the last 2 years to predict the next three.
Now I have a question on the 2-year
Good.
part. Also, too, if the person happened to switch jobs, but it was in the same field, does
Hmm.
that count as a 2-year? I heard that, or I'm not sure.
Yeah, I mean, you always
Okay.
that's again. I don't discourage you. You don't need 2 years at the same exact spot, the same exact income. That like never. I mean,
Mhm.
it happens, but
Right.
it's rare. No, you don't need a specific anything in the 2 years.
Mhm.
It's very individualized. The guidelines are pretty open, and that's why you would call us to help kind of sift through that.
Okay.
Sometimes I'll have people come and they come right out of school,
Mhm.
and school can be part of your work history,
Mhm.
and it doesn't. People don't always understand that. If you go right into the field, we can use that as part of the you know how you got there
Mhm.
to your employment. How are you paid? Is it something that's always the same each month? That's consistency. We like that, a little less risk. Or is it something that's different each month, like you and
Yeah.
I,
Mhm.
right? So
Right.
then you want a little bit more history.
Okay. All right. And then also you're pooling other assets and other income from other places too. So you're looking at everything that they may receive. Like if they receive, like retirement or child support or whatever,
Yeah,
anything that they're receiving.
yeah, whatever. I mean, it's really up to the customer to the consumer to whatever income they have or want to use. We
Mhm.
can absolutely look at. But I tell people, we look at qualifying income. There's certain things again in the guidelines that we have to make sure it's verifiable. There's some things that aren't. If my 5-year-old is at the lemonade stand and she makes $100, like we probably wouldn't use that for qualifying income for her
Okay.
alone,
Okay.
unless she puts on her tax returns. So it's there's certain things we can and can't use. Yeah, but in general, I mean, anything
Okay.
that's verifiable was why not try to include it?
Well, how about two couples?
Hmm.
Sometimes you might have couples who one just might apply,
Hmm.
or maybe two. Why
Hmm.
would that? What's some of the reasons why that would happen?
That's a great question, and
Mhm.
that's a lot of times in the intro call when I'm getting to kind of know why. Again, why are we here? What are we doing?
Mhm.
One of the things I ask: Are you the only one?
Mhm.
That's going alone, and a lot of people don't understand or know
Mhm.
what's best. I mean,
Right.
you may have partner,
Mhm.
fiance, married, whatever
Mhm.
it is. Um, we don't know.
Mhm.
That's fine. Um, I don't expect you to know. I always say if you think for one kind of seed of doubt that it would be better with multiple, then put both
Right.
to start. And then the more information I have, the more I can help. I could say,
Mhm.
oh, because of this reason, this person doesn't qualify right now, but then let's look at the individual.
Mhm.
Or you know what? Together, this helps us get to our goal. So I can flip and flop and move it around there. People don't always understand that. So I try to like de-escalate that right up front and be like, oh no, just provide it. That way I can, if you're both on board, like
Right.
let's look at it. And then we'll go from there.
Okay. All right. And then we talked about again the liabilities and stuff like that. So the debt that they may have or different things like that. And then other properties that they may own or different and then it talks about too like people may already be in a contract somewhere else or maybe have some other how does that look when there's other property or other things?
If like they own before,
Hmm.
yeah, I mean it's just something to look at. Again, if
Okay.
you're something we see in this market is coming out of like that COVID time where interest rates were in the twos and the three. People have these houses and they have mortgages on them, but their interest rates are really low.
Hmm.
So that's great, but it's just not the environment we're in right now.
Right.
Um, One of the most popular questions I get is, "Do I need to sell the house, Matt, to get the next one?" And that's completely individual.
Right.
We have to look at that, and a lot of times I look at both. The option of, hey, if we do sell it, maybe there's some equity, we can kind of help with
Right.
that. Use that for a down payment. Here's what a approval would look like. And wait, here's if you don't, it's going to look like you have more debt because you do,
Right.
right? But can we still qualify it? And that'll add a little bit of flexibility for that person to more move at their convenience than a kind of a have to.
Hmm.
Um, but again, neither is for everybody. We want to look at it, what makes sense, and that definitely goes into the math.
Okay.
It's possible to have multiple mortgages, but it's just going to come down to math.
Okay. All right. And then also too, how does it play when they get grants from either, you know, maybe West Penn or somewhere else? How does that usually play into that?
Yeah, I mean, you can, they're all different angles, whether it's the community or where you live or where you're moving. I mean, something like that. A grant is something we get questions all the time. I tell people get all the information.
Hmm.
We don't want to just solely rely on the internet to know what's like out there, because there's a lot of stuff that's either it's old,
Right.
might be from 2001,
Hmm.
and it's just not available anymore, or it's something that's active and then there's a defined end. Sometimes they're just a certain amount of dollars, and then once it's over, like once it's used by different home buyers, then it ends for the budget year.
Right.
So you don't want to assume that you're
Getting.
able to obtain it.
Yeah.
So again, in the pre-approval, I'm like, yes, that's something to absolutely look at, but get all the information and let's
Okay.
make sure like you can get pre-authorized for something like a grant or a bond or anything like that, and make sure we meet the parameters.
Mm.
Because a lot of times I see it as you know it almost comes off as like a marketing for these different
Right.
entities where it's like, okay, this is available up to a certain amount.
Mm.
I want to take the up to out of it.
Yeah.
What does this consumer qualify
Yeah. What
for?
are they going to
And
get?
then that'll help, pay for, in theory, some of the costs. But again, not making any assumptions. We want to
Yeah.
get that in
And sometimes
detail.
that can delay the process because sometimes they don't know until the end. Yeah.
Unfortunately,
Yeah.
that's one. There's a lot of things that, yeah, it's just a lot of it's not knowing the absolute fact at the time of home purchase, and that's where we try to help clear that up. Like,
Okay.
hey, these could be hurdles. We can get you pre-approved, but you know talk to your employer, like, is it borrowing from a retirement account?
Mhm.
Something like that. People like that's delayed, before. It's because they just people assume they could do a certain amount and didn't realize you couldn't.
Right.
Um, there's it's all about getting the information ahead of time. It's
That
like the biggest piece.
Yeah, knowing all the information. Yeah. And I like how you mentioned earlier too about when we talked about rushing people, people buying like in a rush, where I think that's what people think. I think when they think they have to go talk to a lender, they're going to rush them or take them into something. But actually, no, you want them to take their time. You want to talk about it. You want to make sure that 'cause it's a huge purchase. So you want to make sure you're ready.
Exactly.
And you don't have to do it now. Like when they talk to you, they don't. Yeah.
Yeah, and that's where like if even when they start it,
Yeah.
say there's some additional documentation.
Yeah.
I'm like, I'll be around.
Yeah.
I'll tell you what you need, and then if it takes you a few days, it's understandable. Like
Yeah.
that's one of the questions. I'm like, are you buying a house tonight? They're like, no. I'm like, oh, okay. Well then,
Yeah.
you don't have to worry about it. Get it to me over the
Yeah.
weekend. We can get you pre-approved on Monday or Tuesday, just to keep again the stress of something that is stressful. Buying a home, as low stress as possible.
Right. And also too, I think a lot of what the viewers what we they don't know is that too, actually with the lenders, the teams that's all a part of it. We don't want to rush anybody that's not ready because that will be a horrible transaction. Like when yeah, we want a smooth transaction. So we definitely want people to be ready and comfortable and confident in what they're doing.
Exactly.
Yeah. All right. So what's one thing buyers could do earlier in the process that would completely change their experience with you?
We've said it, right?
Mhm.
Call.
Call.
Just call.
Mhm.
Get it started. Whether it's just an initial on the phone consultation,
Mhm.
or it's then kind of educating what's the expectation of the process, and that's really all it is. Because once I know your goals and I know your time frames, then I'll tell you exactly when you do this, why you do this now, kind of that kind of plan, and
Mhm.
then they can take it from there. Just getting information,
Right.
as soon as possible.
Mhm.
Not as soon as possible within reason. Like
Right.
again, you don't need to sprint through it or sprint into it, but if you're thinking about it, then I said you did the hard part. You reached out.
Yeah.
I was like,
Yeah.
now we'll lay out again the information, and then it's there to provide you the information, so you're making the educated decision. There's no obligation.
Mhm.
There's nothing you have to do with it. There's some people I'll pre-approve, and I'm like, yeah, you could use it in a month, or you could call us back in a year,
Yeah.
and that happens
Yeah.
every year. I mean, I get people from 5 years, ago. I've been pre-approving each year, and now it's the right time. I mean,
Yeah.
it's very hard to. No one has that crystal ball. At least I don't. Right.
Mhm.
So it's hard to know when that perfect time is going to be for the buyer. You don't have to.
Right.
You're not going to try to time the market necessarily. Just call, get ready, and that way you stay ready.
Okay. All right. So, my podcast is called Seeking Wisdom Through Real Estate.
Mhm.
So, Matt, could you give us a piece of wisdom?
But I just say, when in doubt, question everything.
Mhm.
Um, and I'm all about, as you can tell, I've said it how many times, is just get the information first
Mhm.
before you make a decision. And
Mhm.
that could go not just real estate, but
Right.
that's just, again, I think it's a good life tip.
Mhm.
Whether I'm buying, you know, picking a restaurant for dinner,
Right.
or what it is, it's like even just doing small amount of research, I think, goes a long way.
Mhm.
Um, and that way you're an educated buyer is a confident buyer,
Mm.
right? And you want to be confident in something like this. So I think that's probably the best piece of wisdom or advice I can give for doing this as long as I have, is just question it, um, ask questions and do it up front, and you'll be in a real good spot.
Yeah. Well, I totally agree with that, Matt. That's what this podcast is about, educating the people so they can know. Yeah. So, Matt, how can people reach out and get a hold of you?
Yeah. So our best method, like the most popular way people reach out,
Hmm.
is my cell phone,
Okay.
which you're going to have in the
Yep.
the link. So that'll be in the description with the video. Um, it's it's an oldie but goodie. You call me
Okay.
anytime, or you shoot me a text. I respond to both. I have it on me way too often.
Hmm.
My family can attest. Um, and I kind of always joke, is we're working real estate hours,
Right.
so we know it's can happen anytime.
Right.
The most popular thing is, if you're not busy, you go on a trip.
Mhm.
and then you get
Mhm.
as busy as everyone wants to buy, and it's like that doesn't make any sense, but
Right.
it happens all the time. So we got to know that, and that's the best way.
Mhm.
Now I have my website too, which I'll get you a link for.
Okay.
That's something that just has some resources that you can start to peruse if you're more of a person that's like, hey, I that all sounds great, Matt, but I don't want to reach out this second.
Right.
Good resource on there. There's even a mortgage calculator that they can
Okay.
use, people can use, which is going to be more accurate than a lot of the stuff that's out there on the internet.
Okay.
It just like kind of helps people through prompts,
Mhm.
putting in information instead of assuming when you go to a lot of these sites, they just like do a, this is my payment, and a lot of times those aren't the most accurate,
Right.
we'll say. So it keeps them just again getting some info, but in like a kind of behind the scenes
Okay.
method, which isn't what again I recommend, but I know we all do it.
Right.
So
Right.
that's a great way. And there's a spot where you could apply right through there,
Okay.
and that gets me a notification. And that's always do a follow up call. That's something we always do. People are like, well, if you do it online, like, you know, is it completed? It's like,
Right.
no, I will call you, and then
Yeah.
we'll go through your goals and make sure we're on the same page. So those are probably my two most effective ways of communication.
And is this mortgage map on there, Matt?
It is not
Can I
actually.
have that? Attach that link to it?
Yeah, I will.
Okay.
I will get that to
Okay.
you. I have the updated one with my updated
Yes, I
photo.
did.
I have some in my bag. I carry them everywhere.
Uh-huh.
Yeah, it's something I'm a lot of times providing to really anyone I pre-approve, but real new buyers, new real
Mhm.
estate agents. It's just kind of a piece
Yeah.
together of different useful pieces that I've used over the years.
Okay.
Yeah,
All right. Well, had a good time, Matt. Thanks for
yeah.
joining us.
This is a blast. I love it.
Yeah. Get some good information out there. All right. So, um, please like and subscribe and share this video. Comment and let me know what you think and would like to see for future videos. So, see you next week when we will be seeking more wisdom through real estate. God bless.